In today's video, I want to talk briefly about a question that many, if not all traders have, which is the question of whether or not retail traders can actually benefit from the institutional trading methods and strategies. When we think about institutional trading, we immediately think about a trading desk inside a bank or a hedge fund. The retail trader often imagines such situation without knowing what really goes on in these places, so he assumes institutional traders have closely guarded secrets. The reality is that the way institutions trade is not a secret at all. There is a vast scientific literature that unpacks the details of how finance works. The problem is that most retail traders don't even realize that they should look for the scientific literature in the first place. They believe that institutional traders have some sort of magical indicator to put on a price chart or some sort of risk management trick that allows them to beat the market. That is all nonsense, of course. There's no such thing as a trick to make money. What institutional traders do is the marriage between mathematics, statistics, physics, and finance. And it's actually simpler than what it sounds. As I said, there's a vast scientific literature that deals with the way risk works in the financial markets and the correct way of making money. The issue is that most retail traders are not mathematically educated, and they believe that the price chart is the only tool to deal with the market. Some retail traders cannot even conceptualize the possibility of not looking at a chart. That's because they don't know anything else beyond the chart. The price chart has its place in certain methods and situations, but it's just a tool. The question, however, is if these retail traders can actually use the same institutional trading methods that are used in banks and hedge funds to make money on their own. And the answer is yes. If institutional trading methods are not closely guarded secrets, and retail traders can also implement these methods in their trading, then why aren't these methods popular by now? There are many different answers to this question. The first is that most people want to learn a simple trick to make money in the financial markets. The reality is that most people are always after that quick fix or simplistic solution that will make their lives that much easier. When a trader has that kind of mentality, he will never even reach a point where he will search for the right answers when it comes to learning good trading methodologies. This shortcut mentality is useless because it will always prevent you from going after the stuff that actually has some substance. The rationale of a trader with the shortcut mentality is that he believes it's easier to find a simple solution to make money quickly. What this trader doesn't realize is that there is no shortcut or a simple trick to do that, so he will spend his entire life looking for the solution. In reality, you have to make some sacrifices for a period of time to learn stuff that most people are not willing to learn. Then, and only then, you can put yourself in a position of advantage. Unfortunately, most people are not willing to do that. They have this constant voice in their heads making them believe that the simple solution is right in front of them. They just haven't figured out what it is yet. This incorrect Holy Grail seeking mentality is part of the problem. And it leads to the other part of the problem, which is the unwillingness to learn more complicated ideas, which are definitely necessary if you want to use the institutional trading methods. A person without the correct knowledge will believe she is deeply smart, while a person with a lot of knowledge will understand her limitations. That's the so-called Dunning-Kruger effect. I like to say that bad trading methods are easy to learn and difficult to apply, and good trading methods are difficult to learn and easier to apply. Bad trading methods are difficult to apply for the wrong reasons. They are difficult to apply not because the market is complicated. They appear to be difficult because they simply don't work, and they lack the necessary level of scientific substance to hold them in place. There is tremendous confusion about what institutional traders do. For example, many institutional methods used by banks involve the derivatives market, more specifically, the stock options market. If you do a quick search around the internet, you will see an astonishing level of incorrect ideas floating around. People preaching certain types of strategies that are simply prohibited in the institutional domain because of their inherently bad risk profile. The options market has deeply interesting risk structures if it is used correctly, but if it is used incorrectly, it can cause a tremendous amount of damage. So yes, the retail trader can apply the same strategies that institutional traders use, but the requirement is that retail traders understand the strategies well enough. One of the good things about institutional trading methods is that they are very objective. You don't need to do this immense psychological work to maintain your self-discipline to the trading plan and all of that. It's as if most of the work is already built in the method itself, so the application of such methods is almost comically simple. There is a quote by Abraham Lincoln that synthesizes what I want to say by all of this, and it goes like this. If I had 5 minutes to chop down a tree, I would spend the first 3 minutes sharpening my axe. The institutional trading methods are like a very sharp axe. It's very easy to chop down the tree if you have a dangerously sharp axe. Bad trading strategies are like a dull axe. The lumberjack needs to make an extreme amount of effort to chop down a tree using a dull axe, and at the end, he might not even dent the tree at all. Consistent trading is all about sharpening your axe, not about sweating profusely with a dull axe. In summary, yes, it's possible for the retail trader to apply the institutional trading methods. Not all of them, of course. There are certain things that only an institution can do. However, there is a handful of strategies that can be used by the retail trader, and the only thing that separates the retail trader from such strategies is knowledge. They are not guarded in a vault like most people believe to be the case. In a few months, I will release several books explaining the institutional trading strategies that can be used by retail traders. Meanwhile, you can check out the price action trading courses I have for sale. These are based on true market logic, a few simple ideas in linear algebra, fractal geometry, Newtonian physics, and a deep understanding of what buyers and sellers are doing in the price chart. If you like the videos I do and wish to support the channel, please click the like button, subscribe to the channel, activate the notifications button, and leave your feedback below in the comment section. Thank you for watching, and I hope to see you in the next videos. Take care.